Hello and welcome to another session with ABiQ in our series of looking at finance in Africa. And I'm, as always, delighted to have with me Mufti Ismail Dessai. And this time we're going to look specifically at fintech in Africa. So a very exciting and a very promising topic. There's been a lot of news about that in the marketplace as well over the last few especially last few months out of Nigeria. We saw some large acquisitions there. So yeah, I want to kind of hand over without any further ado to Ismail. Take it away. I'll put up the slides for you as well.
Bismillah ar-Rahman ar-Rahim. Nahmaduhu wa nusalli wa nusallimu ala rasulihi al-kareem amma ba'd. Respected management of ABiQ, Mr. Emil, colleagues, and respected participants of today's webinar, I greet you in the name of peace. Assalamu alaikum wa rahmatullahi wa barakatuh. I would firstly like to congratulate and wish well for all our Muslim participants on the advent of the blessed and holy month of Ramadan. May this month be filled with blessings, barakah, and warmth for all of us, and may we derive the full spiritual blessings of this blessed and holy month. Without further ado, I would like to outline and elaborate the main points on our webinar entitled Islamic Fintech in Africa. Today's discussion will cover a brief introduction to our firm, Global Islamic Financial Services. It will also cover an introduction to Fintech, Islamic Fintech, and some of the main solutions of Islamic Fintech. And we will also delve into Islamic Fintech, specifically in Africa, and the opportunities that exist for Islamic Fintech in Africa. We will then have a brief Q&A session. And in the interim, if you do have any queries and questions, then you are most likely or you are most welcome to send your questions on the chat box. And if there are any questions which are unanswered in this webinar, then we will attempt to respond via email at a later stage. So with that, we begin with our credentials of Global Islamic Financial Services. Basically, we have advised on various transactions over the past, including advising various institutions like the Ethica Institute of Islamic Finance. We've also developed close to 700 Islamic financial services products. These are some of the products that we've developed over the term. In the next slide, you would see some of the solutions that we've developed from an Islamic perspective. So we've developed, a Sharia compliant Islamic bond or sukuk for the South African market. We have developed various wealth management products for the Islamic market in South Africa. We've also conducted Shariah training for thousands of bankers and financial professionals in the Muslim world, etc. We've also structured various Islamic bond products for various governments, etc. Next slide. These are more products that we've structured and developed. And essentially, in a nutshell, GIFS, Global Islamic Financial Services, the firm which I represent, has 4 departments. The first department is our corporate and investment banking division, where we have done deal advisory of over $8 billion, where we have raised capital, structured Islamic bonds, done M&A transactions, etc. We've also structured over 700 Islamic financial services products. We also have a private equity division that manages over $4.4 billion. Thirdly, is we do proprietary trading in terms of Islamic commodity murabaha trading on the London Metal Exchange And lastly, is we have an element of financial services and wealth management. So we basically have a full suite of end-to-end Islamic financial services products, and we assist corporates, banks, financial institutions, and retail clients with their Islamic financial requirements. We currently have offices out of South Africa, Dubai, and Turkey, and we will be launching offices in other countries as well this year. So we now move over into the actual discussion with the next slide. So these are some of the services, as you can see, that we provide. So, we essentially provide an end-to-end holistic service in terms of, developing a product from zero until it is fully Sharia compliant. So, if you have an idea or you have a plan in terms of launching a financial services product, we are able to assist you in terms of developing the Sharia version thereof, and also in terms of ensuring that product is Sharia compliant from a Sharia governance perspective. So we ensure that product is compliant. We also take it to market in terms of introducing the product to investors, where we work with a number of investors. So we have close to 126,000 members on our database. We also have close to 350 banks and financial institutions as our clients. And we work with several governments and central banks on Islamic finance as well. So essentially, we also conduct training and knowledge sharing on Islamic finance, where we can provide a holistic solution in terms of training the executive or management of a company on Islamic finance. Next slide. So this is basically our motto: embracing Islamic finance through Sharia compliance and achieving new heights in growth. We now move over to the actual presentation as an introduction to Islamic Fintech. So what exactly is Fintech? So basically, Fintech essentially is the proposition of financial services backed by technology or digital platforms in new and innovative ways. So it is essentially the advent of technology or digital platforms that would enhance the service offering of a financial product or solution. That in essence is Fintech. So Fintech is made up of two words. One is finance, and the other is technology, and hence you have the word Fintech. So you have financial solutions that are backed by technology. And obviously, with the advent of the fourth industrial revolution, there is a huge push towards digitization and advancements in technology. And you have various platforms and digital platforms that have sought to disrupt current or older versions of finance and banking. And you have obviously with the COVID-19 pandemic, this has brought about a unique change globally, where globally people are forced to access financial services online through the use of technology, and branchless, banking, etc. So with that, this has created huge opportunities, and obviously, Fintech, in terms of Islamic Fintech, poses an even greater opportunity because to date there has been very little innovation in this sector, and obviously we understand that going forward, that Islamic finance as it currently stands in terms of outdated technology would be disrupted through the use of Islamic Fintech for various reasons. So Islamic Fintech is essentially the combination of fintech technologies with the underlying Islamic principles of finance and economics. So in other words, that you could have a Fintech that provides a conventional solution, but it could also provide an Islamic Fintech solution. So what I mean by this is that, let's say we have a technology that provides online investments, or what is called wealth tech or invest tech solutions. You could have an Islamic version of that solution being offered globally. So there are 7 key areas of fintech. You have insurtech, which is essentially insurance products that are backed by technology. Now, on the Islamic side, you wouldn't have called it insurtech, you call it tech. So essentially, you have takaful, which is the Islamic word for insurance. So takaful refers to Islamic indemnification and hence you have InsurTech. So in Islamic finance, you would have Tech, you would have blockchain, so there could be Islamic blockchain, investments and wealth management. So you also have microfinance that is backed by technology. You have charity and payments. So in other words, you could have charitable financial instruments that are also backed by technology. You could also have payments, the likes of the various examples like the likes of Stripe, PayPal, etc., that are backed by technology to provide global payment solutions. So essentially, there are two categories of fintech. One is you have donation based, and the other is you have investment based. So on the donation side, you could have donation based crowdfunding. You have companies out there like Launch Good, etc., where you donate as a crowdfunding mechanism to social entrepreneurship endeavors, etc. And then you have investment based fintech, where investments are done. From an investment perspective, you could have peer-to-peer lending, etc., where funding or investment is crowd-funded, and then via peer-to-peer solution, SMEs, small medium enterprises receive funding on the back of that. And there are various examples of this globally from a crowdfunding perspective. So essentially, you have donation-based fintech, and you have investment-based fintech. And then from a social finance, from an Islamic social finance perspective, there are various Islamic social finance instruments like Waqf, which is an Islamic endowment. So an Islamic endowment refers to where you donate an asset for the purposes of ongoing benefit and rewards, which is donated for the cause of Islam. So you could have assets that could be donated to service the needs of the poor, to service a mosque, to service various needs, and you could have a waqf that is then through the use of technology, where you could have waqf platforms where people could donate online for a waqf cause. And then you could have zakat. Zakat is an Islamic alms. As you know that generally during the month of Ramadan or just before Ramadan, Muslims would donate or provide zakat and dispense of the zakat of 2.5% of their zakatable assets. So this could be another example of zakat tech. And then you could have takaful for Islamic microfinance, or indemnification for Islamic microfinance solutions. So what is the opportunity for Islamic fintech? So it is estimated that 26% of the world's population would be Muslim by 2030. So that is a very huge number, and the majority of the Muslim population by 2030 would be young millennials. So that poses a huge opportunity in terms of fintech and more specifically Islamic fintech. So what is Islamic fintech in the perspective of fintech, and how do we ensure that a fintech is Sharia compliant? So in a nutshell, there would be certain Sharia compliance and governance structures that need to be followed in terms of ensuring that the fintech solution that is being compliant, ensuring that the fintech solution be provided is Sharia compliant. So whether that includes a payment solution in terms of the underlying terms and conditions being Sharia compliant, or let's say a buy now pay later scheme that is also Sharia compliant. So all of these solutions need to follow a certain Sharia compliance and governance structure in terms of where a fatwa on Islamic legal edict is provided by a group of Sharia scholars that will ensure that the solution is Sharia compliant. That will provide credibility now to the structure globally, where Muslims globally would be able to buy into an Islamic fintech solution. So we now move over to the next slide. So the question is, why fintech and why Islamic fintech? What is the benefits of fintech and why do we need fintech. So obviously there are some very clear objectives of fintech and what fintech can do, but I would also like to enumerate the specific benefits around Islamic fintech and why Islamic fintech is beneficial and would be able to revolutionize the Islamic economic system and the economies of Muslim countries globally going forward. So first is obviously the convenience. There's a huge convenience. There's a huge convenience in terms of fintech, where you have millennials in terms of their behavioral modalities and and behavioral finance, where millennials, they want to achieve they want to achieve solutions and acquire solutions immediately at their leisure and their convenience, as opposed to an average millennial going to a branch to procure if a banking solution. They would simply seek to procure that solution online through the use of digital technology. And obviously the convenience is there in terms of digitization and the speed through which financial services are then dispensed off to the population. Secondly, is that it provides the means to keep economies expanding while traditional methods have limited applicability. So traditional methods in terms of branch banking, etc., there are certain geographical constraints in terms of how those solutions are then applied, and there is constraints in terms of capacity and scale. But with the fintech, you have through the use of machine learning, artificial intelligence, etc., where millions and billions of people, till an infinite number, will be able to be serviced through the use of technology, through the use of artificial intelligence, machine learning, etc. A simple example of this is a chatbot. You go onto a website, a chatbot would be able to sell you a financial services solution without any human interaction to a large extent. So the chatbot uses machine learning in terms of understanding what types of questions are posed by a potential customer, what are the objections, etc. And then you have vast applications. Like there is an application where through the use of neurotransmitters within the brain in a chip being inserted, that solution would then be able to align with your financial goals, so that you are controlled in terms of your spending habits. So this is where there's huge scale and efficiency created in the global economic system, and obviously the same would be applicable from an Islamic economic system. So there's improved, efficient, and secure payment systems. I mean, you have currently outdated traditional methods of payments, where payments and cash is computed through Excel sheets, etc. And I have heard personally various examples of major banks where on a daily basis there is actually a shortfall of cash. So by having new and improved and more efficient payment systems, we'd be able to remove that error of or that margin of error. And obviously, there's a level of speed with a certain defined accuracy, and there's an innovative way to address the financial data mining issues, activity reports, etc. So obviously, fintech becomes an innovative way to address inefficiencies, productivity within the financial system itself. And just the other day, I came across a technology where through the usage of OKRs in terms of specific defined objectives and core and key indicators that one could track, the productivity of employees within a particular organization. So obviously, with the use of fintech, we'd be able to address the inefficiencies that are currently in the financial and economic system. So obviously, fintech is user friendly in the sense that today many people are well aware of banking applications and apps where online they can log into a banking app and make payments, etc., as opposed to now going onto a computer, going to a branch, etc., to go and make payments. So through the use of fintech, we could have much more user-friendly applications, where it'll enhance people's lives. And obviously, there is efficient time management. I mean, imagine, for every small banking problem, you need to visit a branch. That would take you hours by the time you queue at a system, and especially now with COVID, there has to be, safe distancing, etc. It could take you 2, 3, 4 hours going into a branch, whereas if you simply had to log in, to an app, or you had to log in into a database, or into a digital platform, and then within a couple of hours, your issue is then resolved without you wasting time standing in a queue, etc. And you could have used those 2 or 3 hours, in a much more productive manner. Let's say, for example, if you're a business owner, you would be able to focus on more revenue generational activities. Now imagine if we had to compute all those hours that could be saved through the use of digitization. Those hours that a person would spend going to a branch as an entrepreneur or business owner, and if you could have been saved those hours, how much would that add to the bottom line of your business? And I'm sure there are studies, that could indicate that in terms of surveys, etc., that have been done. But that amount could run into the billions of dollars that are saved. So obviously, there are huge benefits of fintech, and obviously, from an Islamic fintech perspective, the fundamental benefit is that we're now able to develop more innovative, unique solutions to a growing millennial base globally. Next slide. So this, snapshot provides you with a quick snapshot and overview of the different fintech platforms. As you can see, you have on the financing side, you have crowdfunding, you have donation-based crowdfunding, you have reward-based crowdfunding, you could have factoring in terms of factoring and purchase order funding. On the asset management side, you have, wealth tech. On the payment side, one topic that we will discuss today is blockchain and the use of cryptocurrencies and the Islamic view thereof. And other fintechs that you have include, insurance, insurtech, IT infrastructure or software as a service, SaaS platforms. So today you have SaaS platforms, you have PaaS platforms, payment as a service platforms, you have infrastructure platforms, etc. So there are different types of platforms that could be used at the back end of a fintech to support unique financial technologies. Next slide. So, when we talk of Islamic fintech, we're obviously talking of Islamic financial technologies. And again, to reiterate, from previous webinars, but also to reiterate for any new participants, some of the basic principles of Islamic finance include the fact that all of the transactions need to conform with Islamic law. There's a prohibition of interest. You could trade between 2 or more parties. There is a prohibition of gambling, speculation, etc. And there is a sharing of risk between the parties. Now, not every transaction there is a sharing of risk between the parties, but there could be certain, crowdfunding initiatives like, Islamic equity crowdfunding, where let's say 2 parties decide that they would like to contribute. One party would like to contribute the resources, and the other party would like to contribute funding, for example. So you could have an innovative matchmaking Islamic crowdfunding initiative that could be launched in Africa, where let's say you have an entrepreneur from Africa that has a good idea to produce a certain product or solution that could be exported into the West, and there is a proper vetting criteria where the platform will vet the individual, vet the solution, etc., and then onboard the solution onto the crowdfunding platform. And you could have a Western entrepreneur or an entrepreneur from the West or an investor from the West that says, look, if I had to build a solution in the West, it'll cost me maybe $100,000, but here's an entrepreneur that has been vetted in Africa, where all of the risks have been mitigated to a certain extent, and you have a third party buffer, or you have a credible third party that has vetted the transaction and the individual, and we can now, instead of spending $100,000 to produce the same solution, we can only spend $5,000, where we could fund an entrepreneur in Africa, and people's livelihoods could then be secured in the process. So these are some of the basic Sharia principles. And with that, we move over to the next slide. So this is a market map of certain Islamic, fintech solutions. And as you can see, that you have banking solutions. So you have the likes of Insha, which is a digital fintech offshoot of the Al Baraka Banking Group, which is an Islamic banking conglomerate based in Bahrain. You have banking IT. You have alternative lending, like lead generation platforms, online lenders. You have crowdfunding, the likes of Ethis and Zakat platforms like Pay Zakat, Zakat Ify, etc. You have investment platforms, robo advisors, the likes of Wahid. Payments, you have Pay Halal. Business payments, you have Pay Forward, etc. And then you have crypto exchanges, the like of Rain, etc. That provide Islamic solutions. So these are some of the just a snapshot of Islamic fintech platforms, and as you can see, they're approximately 134. It should probably be somewhere around 150 by now. We have 41 platforms that have been funded, close to about $900 million of funding. In the last 2 years, it's probably increased up to $260 million. So various companies are still at a very angel, seed level funding stage, and a few companies have only reached a Series A funding round. So we believe that in the next 3 to 5 years, much more of these seed-based or seed, or these companies that are at the seed level or pre-Series A funding round would start to move into Series A and Series B funding rounds. And this is where we find that the Islamic fintech industry will mature to a large level, with larger conglomerates and venture capital fund firms seeking to take equity stakes and seeking to fund as we go into a much more mature phase of the Islamic fintech industry. So as you can see, most active investors are at the seed stage and incubator phase. In terms of exits, very few exits currently, as you can see. But if you look at the next slide, the iPhone fintech group that is part of the Red Money Group provides you with a very clear landscape of the Islamic fintech landscape. So as you can see, there are Islamic fintechs in almost every facet of the fintech space. So you have alternative finance, you have banking software, you've got payments, crowdfunding, data. There are, however, certain elements or niches where Islamic fintech hasn't tapped yet, and that includes solutions like buy now, pay later. We see a huge gap in terms of Islamic microfinance from a technology and digital software perspective. So right now you have technology that supports current solutions in the market that have taken mainstay. So banking solutions, insurtech, payments, etc. But there is still a niche in terms of buy now, pay later schemes, microfinance, etc. There is a huge niche in terms of that, and this is where these type of schemes could have a huge impact on the African market. And as we go into the next slide, you'll see why. So this is fintech in Africa, not discussing Islamic fintech per se, because Islamic fintech in Africa has primarily been concentrated around the North African market. So you have certain Islamic fintechs like crowdfunding initiatives in countries like Egypt, Morocco, etc. But there's a huge opportunity in terms of expanding the Islamic fintech landscape into Africa in majority Muslim countries like Nigeria, Cameroon, Ghana, etc., where there could be a huge level of financial inclusion. Now, the model could be one of two. It could be where the existing fintechs, as you can see in this model, in different countries like in Algeria, Egypt, Ethiopia, etc., the existing fintechs simply convert their solutions, or they create a separate Islamic version of their solution. So instead of reinventing the wheel, as they say, we could simply use the existing infrastructure to create an Islamic version thereof. Or it could be a grounds up approach in terms of developing a brand new Islamic fintech platforms, which will take a much more longer period of time, especially given the fact that there is a low level of funding, that could be provided to such platforms, etc. So, in our view, the best methodology is for potential participants that want to engage in Islamic fintech in Africa is to seek existing fintech platforms and develop Islamic versions thereof, of these fintech platforms. We now move over to the next slide. So as you can see, we now move over to certain Islamic fintech solutions as case studies. So you have an Islamic blockchain and smart contracts. So just to give you a quick introduction to Islamic blockchain or blockchain, is essentially you have three different forms of ledgers. You have a public ledger, you have a private ledger, and you have a hybrid or mixed ledger. Then you have these various blockchain, blockchain as a solution that would provide various mechanisms to enable financial transactions within the Islamic finance industry and sector. And what I mean by this is that a simple example is, if you look at the anatomy of an Islamic finance transaction as a murabaha transaction, an Islamic trade finance transaction, there are certain legs that need to be followed in order. And if that sequence is broken, then the transaction does not become Sharia compliant anymore, and the profits thereof of that transaction need to be dispensed of in charity. So how do we eliminate the potential risk of non-Sharia compliance, or the risk of Sharia non-compliance in a murabaha or an Islamic trade finance transaction? So if you had a smart contract or a blockchain solution that would essentially force the participants within that transaction in terms of the various legs to comply, and after every transaction is concluded, then the different nodes within that blockchain or smart contract speak to each other in terms of compliance. So there's a huge opportunity in terms of Islamic blockchain and smart contracts. From a cryptocurrency perspective, essentially a cryptocurrency from an Islamic finance perspective presents a huge opportunity, in the sense that this is technology that will be backed by blockchain, and a crypto, if it is backed by the likes of gold, silver, etc., or different metals, then that will make it all the more Sharia compliant. Not that the crypto itself is not compliant, but if we had crypto that is backed by gold and silver, and it could be cashed out in the form of fiat currency through like a Visa or MasterCard credit card solution, then that would create huge interest from the Muslim world in terms of having a gold-backed crypto token, etc. Next slide. So what is the opportunity for Islamic wealth tech, or technology that backs wealth and investment solutions? So with $30 trillion from the great wealth transfer, millennials can save the planet just in time for brunch. This is the motto and statement that we have in terms of saying that there will be a huge wealth generational transfer. And millennials, if they have access to the right forms of investments and wealth solutions that speak to sustainability and um, ESG and sustainable Islamic investments, that those funds that are being transferred over to them in the new generation through the use of digitized means would be able to be channeled in sustainable financial economic development. And what I mean by this is that if we had to develop solutions that can brace ourselves for this huge, transfer of wealth in a sustainable manner, then that will be a game changer in terms of climate change, sustainable finance, etc. This is essentially the opportunity in terms of sustainable finance and wealth tech and invest tech. So millennials are 2 times more likely to make sustainable investments than the average investor. So obviously, millennial investors, have a different mindset from an investment perspective. They've been exposed to, the likes of apps like Robinhood, etc., and they understand that they need to make a change, and they have bought into the change in terms of sustainable finance, climate change, etc. Next slide. So Islamic fintech in Africa, 50% in Africa, on the African continent, don't have access to branch networks, and 42% of the Africa population are Muslim. So 42% of the population of the entire continent, of the African continent, are Muslim or are of the Muslim faith. It is one of the youngest populations globally, so obviously a huge millennial contingent on the African continent, and there is a huge rise of the middle class in Africa. If you look at countries like Tanzania, etc., there is a huge, there are reports of millions of people moving from the lower income class to the middle income class. Obviously, that will give rise to to huge opportunities for wealth tech, Islamic fintech, etc. So, who are the top investors of fintech in Africa? So it includes Barclays Bank, the Omidyar Network, the Bill and Melinda Gates Foundation, and the MasterCard Foundation. So what we see in terms of investment into fintech in Africa is that you have it largely, supplied from an investment perspective by foundations and philanthropies. So the large venture capital firms haven't yet made a serious push to invest in Africa, and this is why we believe that Africa is the last frontier of massive investment into venture capital, etc., where investors who invest now would see massive growth in the investments on the African continent, as there is this huge wave of the rise in the middle class in Africa. And with the new Africa Free Continental Trade Agreement, or AFCTA, where 52 countries on the African continent would become essentially borderless from a trading perspective. So if you could have one fintech that speaks to the entire African continent of close to 1.3 billion people, that would essentially be compared to the market or to the Chinese market of 1.3 billion people. So imagine having access to a huge continent of 1.3 billion people, where 42% of the population represents Muslims who are very underserved in the market and underbanked, if I may call it that, where you could have a huge impact in terms of sustainability, poverty eradication, etc. So this is where the opportunity lies in Africa. Next slide. So as you can see here are some stats around Islamic fintech in Africa, more from a financial inclusion perspective. If you look at certain countries, if you look at Ghana, for example, it's 35% of the population are banked. If you look at Niger, only 3.5% of the population are banked. So huge opportunity in terms of financial inclusion for these different populations. And as the future holds, we would see millions of Africans coming into the banking system. And if we had fintech, then that poses a huge opportunity. Next slide. So let's look at the funding or the investment of startups in Africa. So it recently hit $1 billion in 2019, and these are some of the fintechs that have been funded. So as you can see, there is a spread of sub-Saharan entities being funded. You got some North African investments, and you got fairly small portion into West African and East African fintechs. If you look at Central Africa, there's almost zero investment into fintechs in Central Africa. Yet Central Africa, which is called the Great Lakes region, holds massive opportunity in terms of fintech and financial inclusion. So the point is that you have these fintechs in Africa that have started to receive funding, but there's still huge pockets of growth in Africa for fintech and investment into fintech. Next slide. So let's talk of a specific solution for Africa in terms of how Islamic fintech can benefit the African continent. So according to Ericsson Mobility Report of 2020, 70% of the population would be using smartphones. So this is a huge opportunity for Islamic microfinance and Islamic fintech. So you got 70% of the population using smartphones, yet a large population still don't have access to branch networks of banks. So if you've got 50% of the population that don't have access to branch networks, then there are at least 20 to 25% of the African population that have access to a smartphone but don't have access to branch networks. So that is obviously a huge gap in terms of the opportunity for fintech players to access that market and create financial inclusion within the financial services sector. There's a huge untapped market, and we could provide key access points through mobile payments, retail store points, etc., in remote areas. Now, if you look at the architecture of fintech, typically in Africa, you've got retail outlets or chain stores or retail chain stores that have a good branch network of retail outlets throughout Africa. And by using those outlets, we are able to then provide financial services in areas where there would typically be no branch networks, etc. According to an Ernst & Y report, the adoption of fintech is not an option anymore. If you look at microfinance, it speeds up financial inclusion, and we can create a more efficient financial ecosystem. 42% of the African continent are Muslim. Next slide. So lastly, before we terminate the presentation, how can we assist as a network, as Global Islamic Financial Services and ABiQ? How can we assist you? So firstly, we provide technical support services in terms of setting up a fintech where we have global technology partners, ICT partners that will be able to assist. If you have an idea that needs execution or you need technical support, then we're able to assist. We also can assist from a global networking perspective. So what this means is, if you want to set up a fintech in the United Arab Emirates, in the UK, you are a fintech in Africa, but you want to expand, and grow, we're able to assist you. So if you are also a fintech based in Europe, in the EU, or in North America, we're able to provide you with networks in Africa, so you can establish yourselves. And an example of this is that we recently partnered with a fintech based in the UAE to provide access to global markets from a stock and bond perspective. And they approached us where we are providing them with networks into Africa, and we are doing this on a partnership basis. We can also assist in terms of funding, where we have various networks in terms of funding for ventures. We also have a tech hub based out of South Africa to fund technology companies and software solutions into Africa and globally. We also provide Islamic compliance. So if you have a fintech that wants to access the Islamic or Muslim markets globally of just over 1.7 billion people, then we're able to provide you with Islamic compliance and provide a press release to the market in terms of that. We could also identify global partners. Our global track record speaks for itself in terms of fintech. We have, we currently sit on the Islamic Fintech platform based in Malaysia, which is a global platform for Islamic fintechs, globally. In terms of our tech initiatives as GIFS, we are currently seeking to build a Shariah robo-advisory platform that will provide investment solutions on a robo-advisory machine learning basis to Muslims globally. We're also seeking to partner with other fintechs to develop Islamic solutions on a partnership basis. And we have various other fintech initiatives in the pipeline, including a special aggregator that will provide the best rates for Islamic solutions, for Islamic financial solutions globally. So with that, we'd like to now open up the floor to question and answers and entertain discussion around how we can collaborate.
Excellent. Well, thank you very much for that, Ismail. And it's, I think there's a lot of interest, obviously, across the continent. We've seen some progress made in Nigeria and so on. And I think, maybe just, you've mentioned this in terms of compliance on the blockchain side. I mean, what is the view in terms of blockchains like Bitcoin, which is probably most well known? Is it compliant? Is it not compliant?
Right. So that's a very good question. I always get asked this question in terms of Islamic blockchain and cryptocurrencies, and which cryptocurrencies are Sharia compliant and which are not. And so I would like to take the opportunity to explain what are the key fundamentals in terms of reviewing the Sharia compliance from an Islamic jurisprudence perspective of a crypto. Now, there are two things. One is that from a Sharia perspective, we look at taqdeer. So taqdeer means that can we consider this asset to be an asset of value from an Islamic legal perspective. So if we look at the Bitcoin, the people globally, investors globally regard this to be an asset of value, which can be traded. So hence, we take the first box. The second box is in terms of tathmeen, which means, can we consider this to be a valid medium of exchange and a medium of exchange in terms of exchanging goods, services, etc. So there are two things here. The first is that since governments do not recognize it directly, we can rule out the fact that it falls into the category of an official naqd or currency. But secondly is we have examples in the Sharia, like in places like Iraq, etc., in prehistoric times, where they would use what is called fulus, which was basically a form of market currency or market coins that were not official state currency or state tender, but they were used as a medium of exchange by the people, yet they were not declared as state tender or official state currency. So we have examples in Sharia where currency or fiat solutions like fulus in Africa, fulus, which was essentially a piece of copper that was used as a currency, as a valid medium of exchange in the markets of Iraq, etc. So with that, without delving too much into whether it's a valid form of currency in Sharia or not, we could say that either way, it could be a valid store of value from a Sharia perspective. So with that, in saying that, you would say that Bitcoin from a Sharia perspective is Sharia compliant. Whether or not someone should invest in Bitcoin, that is a separate issue. So we would be able to pronounce and say that Bitcoin is Sharia compliant, but whether one should invest or not in Bitcoin or cryptocurrencies, that is left up to the individual's prerogative and their own due diligence. So what we normally advise the Sharia scholars is that we say that we've got to review every cryptocurrency in terms of its specific merits, whether it's Sharia compliant or not. And also we look at external factors, that we don't want to be advising the public to invest in a crypto that could end up being a scam. So it's very important for us to ensure that the public are not misled also from a Sharia perspective, that where if they think something is compliant, then they will automatically think that they should invest in it.
Okay, great. Thanks for that response as well. So we just go through some of the questions that we want to look at. Is there a means for startups in Central Africa? I mean, what is the kind of funding that they can apply for? And what is the merits for getting access to funding?
So very good question. So in terms of startups in Africa, Central Africa, essentially we look at three main criteria. The first is that how scalable is the solution, and what is unique about that solution. So we look at the durability of the business model and understand how solid the business model is in terms of scale, in terms of durability, in terms of uniqueness, and the USP, or the unique selling point of that model. So if someone came to us and said, we want to set up a payment solution, there are enough payment solutions. But if someone came and said, we want to set up a buy now, pay later scheme, and this is the addressable, TAM, or target addressable market. This is the target market. We think that we could have 10 million customers. This is our channels that we would use to acquire those subscribers. Then we could definitely look at something like that, because it's unique. There's a level of scale, and there's a very specific target market and a view of acquiring the target market. So that's essentially the first point. The second point is in terms of saying we look at the management track record. So if you have a team that doesn't have any track record in fintech, then obviously we wouldn't look at it. So we look at the team in terms of understanding their track record, where they've worked, what situations they've handled in the past, and how they've proven to be innovative, even if it means that they worked at a particular company. What innovations have they developed, and what capabilities have they shown in terms of innovation, entrepreneurship, etc. Thirdly is essentially we look at the landscape in terms of a particular jurisdiction. So Africa is a large continent, but Africa, many people make this mistake that they see Africa as one big country. Every country is different. It has its own unique scenarios and perspectives that play out. So we look at the unique landscape and understand, what are the opportunities for this business model, and what is the right business model in terms of a go-to-market strategy. I mean, typically, you couldn't apply a Western philosophy of a go-to-market strategy in Africa, because it just doesn't work. If you just had, omni-channel marketing solution that targeted social media and targeted corporates as a B2B solution in Africa, that probably wouldn't work in a particular given scenario. But if you look at the specific scenario of saying, we understand this market, this is the track record and case studies of previous businesses and fintechs that have gone to market, and we roll that back up and say, can our solution fit into one of those case studies in terms of a market strategy or a go-to-market strategy? What would the cost be for that, and what are our expected timelines for revenue targets, etc. And if that strategy works, then we understand that in terms of those three criteria, we'd be able to then address a funding solution. We also tend to typically look at taking an equity portion in the structure where there's already a viable MVP. So if it's a totally brand new idea that was never tested in the market, we'd be hesitant to fund something like that. But if someone came and said to us, here's an MVP model, we already have 100 customers or subscribers, this is what we've done, we've got some data on it, this is where we think the opportunity is. Now we can understand that here's a very clear, identifiable, mechanism of scaling the business, sort of, pre-growth, post-seed stage. I think that is where our sweet spot is.
Excellent. We briefed quickly over agriculture. Is there any examples of fintech, related to the agriculture sector that you've come across that stood out for you?
So there are some unique examples. So I wouldn't call it, more specifically fintech, but I would say that you have models in Pakistan like the Howat model. You have various other models that provide payment solutions or mobile payment solutions for farmers that generally don't have access, to bank branches, and also you have microfinance solutions for farmers. A simple example of this is if you look at the tea industry in Tanzania. Typically, you would have growers that would have to outlay cash to purchase implements, inputs, etc. They would have to wait the entire season and then provide the crop or the produce to the buyer or the broker, who would then pay them sort of a market related rate that will be at a huge discount from the actual rate to the manufacturer of tea. And we've seen solutions there where, what if there could be a crowdfunding platform or an investment or peer-to-peer platform that through innovative sort of geotech solutions would be able to understand that at a particular GPS coordinate, through the use of AgTech, in terms of the productivity of that particular piece of land, in terms of the yield, in terms of the track record, and on that basis make an investment decision, provide agricultural funding for inputs, and then have a direct market strategy with the farmer so that they could achieve a higher yield. So instead of them going through brokers, they go direct to market, and then you see that the yield is much higher than anticipated. So typically, the farmer would do all of the hard work over 3-4 months, get only a 10% yield, or a 10% return on investment. But the broker, who is just a middleman, makes a 20% return. So this is where we see a huge opportunity in Africa in terms of a direct go-to-market strategy for agriculture, and also more importantly in terms of linking manufacturers with farmers directly, so that the middlemen are removed, and we have more agro processing in Africa. Give you a simple example. I was once visiting Ghana 3 years ago, and I was very surprised to learn that 40% of the tomato paste in Ghana is imported from Europe, and yet Ghana is a net supplier of raw tomatoes. So imagine if there could be processing of tomato paste in Ghana. Imagine what that would do to food inflation in Africa. So I mean, just a simple example of processing food in Africa would make a huge impact on food inflation and the livelihoods of millions of Africans on the continent.
Availability as well. Yeah, I mean, I think that there's a massive demand to look, or a massive need to look at food production, processing, and distribution across the continent, which has got various knock-on effects.
So totally agree with you there. We've unfortunately run out of time. It's 3 o'clock. I want to thank you again, as always, so much for leading us through this insightful webinar. And we look forward to our next one, hopefully in a few weeks' time as well. I think we would like to point out at the end of the month, we will have a transport webinar looking at transport infrastructure in Africa. And then importantly, after Eid, we will have the ABiQ event here in Dubai, focusing on PPP opportunities. And if you would like to meet Mufti Ismail Dessai, he's going to be present at that event. So reach out to us if you're interested in any public-private partnership programs across the Middle East and Africa. And with that, I would like to wish you all well and Ramadan Kareem. And we will catch you at our next event. Thank you very much for joining us. Have a good day. Thank you very much, Ismail.
Thanks.